All right, ladies and gentlemen, this is a full breakdown of my model external liquidity sequence that has over a 75% win rate, and as you can see right here, has made me over over $120,000 in just this month and the last month, March and April, and in just the past 2 months, it's had over a 75% win rate. So let's actually look at how this model works. Well, it's actually a very simple four-step process. But before we even get into that four-step process, I want to tell you what it's derived off of. It's derived off of ICT's power of three. You find an accumulation zone. Here, I'll actually draw this out. You find an accumulation zone where market's consolidating. You find some sort of manipulation. Often manipulation, we get swept out, and then we have distribution. So what we're trying to do is catch these big moves. And that's why when you actually look at my average win to loss ratio, it's so small because I'm actually risking what? This much to usually make an insane amount of money, or usually about this much. So it's about this. It's like 1 to 4, 1 to 3 ratios, which is honestly very very tight. It's very good for every trader. Now, let's look at the actual time frame alignment of all my trades. So it's a three-step process. I have my daily bias on the biggest time frame, structure on my second biggest time frame, and then my entry is gonna be on the smallest time frame. So how does it actually look if it's like two-way connected? Well, let's say my entry is on the 1 minute, then my structure is gonna be on the 15 minute, and that means my bias is gonna be on the 4 hour, just like 1 minute is connected to 15 minute, 15 minutes can be connected to 4 hour. So it'll kind of work like this: 1 minute right here, 15 minute right here, and just like these two are connected, 4 hours can be my daily bias. So it's as simple as that. Now this entire thing works on like it's kind of if you want to have a good entry, then you want to find all your structure, like all your fair value gaps on the 15 minute, maybe on the 5 minute if you're trading on the 1 hour, and then all your market structure should be on the 5 minute, or I mean on the 15 minute, 1 hour, and then your daily bias is like rejection off liquidity. So for example, if you're trading on the what, like 15 minute chart, right? Then your liquidity zone should be 4 hour charts. And then maybe your fair value gaps or something like that could be on the 15 minute. That would make more sense. And then overall on the weekly chart, that should be where you think the market is gonna move. Like for example, strong rejection zones or news, something like that. But it's hard to explain without me actually telling you guys my model. But here, let me explain to you guys my very four-step simple process external liquidity sequence. So the first thing I look for is rejection slash sweep off of 1 hour external range liquidity. 15 to 1 hour imbalance. So for example, why am I like for example, I can enter off the internal liquidity, which means an imbalance, if it's 15 to 1 hour and it's a strong fair value gap. Then that would make sense. But usually I would aim for external liquidity, so the market could it's kind of like better because I'm trying to catch reversals using this strategy. But then something that I would do sometimes is maybe we have external range liquidity, right? Market comes down, and then what I want to do is actually enter off of this fair value gap, or I'm waiting for a reversal off of fair value gap. And that's kind of a way for me to assert some sort of external liquidity, because all the time that I'm entering these trades, I always want to look for external liquidity in the overall trend. Because, for example, if the trend's going like this, just because it's going like that, I'm not going to enter off right here for a downtrend unless there was some sort of liquidity before. But if it just went like that, then it could be entering off. Whoa, there could be like another fair value gap right here, and then we just skyrocket like that. So I'm looking for the bigger picture always. That's why it's important to go into back into this time frame alignment. Your daily bias structure, looking into all these can help you understand which way the trend's moving. So second thing I look for is a market structure shift displacement on the 5 minute. So let's say we have a market structure shift. The only way that I'm gonna enter a trade, so here I'll put this down. Let's say we were making higher highs, higher lows, blah blah, and then we're coming back down, right? The only way that I would want to enter this trade is if we have liquidity down here, but then I need like a reversal signal type of thing, more confluence, another confluence. So I would wait for market to reverse off this. Maybe we sweep it a little, come up, and I would wait for a market structure shift. But the thing is, when I have this market structure shift, I'm looking for a big candle that's causing an imbalance. So here, I'll show you guys exactly what that looks like. Right here we have displacement. What happened? We have a market structure shift. We have liquidity up here. Market comes down. Market structure shift. But look, we have a big candle right here that's causing an imbalance, showing us that we have a lot of buyers, a big imbalance between buyers and sellers, which is telling us the market's gonna keep going towards this way. So yeah, erase all this. Third thing that I look for is 9 to 21 EMA switch. So let's say we have a market structure shift like right here. Then I'm waiting for an EMA switch. And I'll show you guys that right here actually. For example, this is a good example. Or this is a good example. What happens here? This is an entry. Oh, this is an entry that I took right here. But like confirmation, I followed every single one of the rules. One of the rules is 921 EMA switch. We had that right here on the 5-minute chart. And it's one of the reasons, one of my confluences to enter the trade. Now, again, 921 EMA, and then entry off of an inverse fair value gap. So my entry is usually off of like this right here. We have what? An inverse fair value gap with this imbalance. Wait. Okay. You can't really see this. I think it was on smaller charts. This is actually a really bad example. But here, let me just show you guys this entry that I took the other day. So right here, what we had here, I'll just show you guys the entire, like, I have a perfect example right here. What do we have right here? Accumulation. First, we have accumulation. Then we have manipulation towards this fair value gap on the 1-hour chart. So, but then again, this is only a good example because what do we have? External range liquidity right here. So I'm entering this trade off of the fair value gap because I have already liquidity on the bigger picture. So as you guys can see right here, on the 1-hour, we have a huge fair value gap. And then the strong 2, look, red, it's bearish, bearish, bearish. Three strong candles. And then now when I go back to the 5-minute chart, I'm looking for market to reject through the zone. And we obviously have accumulation right here, breaking past these highs. We have manipulation into this fair value gap, and then we reject the zone, and then we have a market structure shift. That's my second confirmation right here. So off this market structure shift, I'm looking to answer now, and then we have 921 EMA again, another confluence, and then let's see if we have displacement. I would say this counts as a displacement. Gaps do count as a source, like a type of displacement. Right here, this is a huge gap. I think it's just because I don't have pre and post market hours up right now, but then this gap just shows us that we have huge selling, like a lot of selling. And then next thing I'm looking for is a inverse fair value gap. So we could go on what, 15-minute chart, or actually, or actually this is a nice example. We obviously have what, market right here, inverse fair value gap, or we go on the 1-hour. You can probably see a much better one on there because that's actually where we find our structures around the 5-minute. And then yeah, we have one right here because again, we want to do time frame alignment. We have a inverse fair value gap. That is usually where our entry wants to be. We have one right there. Market gets through that, and then what do? We enter. So yeah, that's pretty much the entire model that has made me over like what, $120,000 in just the past 2 months. Obviously, I'm just simplifying it a lot right here. If you guys want the entire breakdown and entire watch me trade like live every single day, join the Discord. I'm making a full bootcamp on there. I'm making whole SMC, ICT bootcamp on there as well. A lot of psychological videos and a whole bunch of other things. So join up and you can live trade with me every day.